Today, I want to talk about the huge market crash that's just started, as the Fed is currently sitting on a $1 trillion loss. I also want to talk about the hedge fund founding billionaire that's just filed for personal bankruptcy, hopefully the first of many. So stay tuned and let's make some money. So let's dive straight in with the key information. So, we can see that just last week, the US Treasury executed a $10 billion debt buyback, the largest ever seen in history. Versen says liquidity injections at this scale signal just one thing: the legacy systems are indeed failing. So not only did the Treasury Department enact a $10 billion buyback, actually, the market wanted them to buy back way more. The market actually offered a whopping $22.8 billion of US bonds, but the Treasury could only afford to buy back 10. Now, what we're seeing here is the Treasury Department effectively backstopping US bonds and bailing out the bondholders, because there's too much risk in these bonds for the wider market to be interested. This here is the yield chart for the US 10-year Treasury bond. As we can see, the yield has been rising massively since 2020-2021, from just 0.5% yield up to practically 5% yield. When market participants aren't interested in a certain bond at its current yield rate, that yield goes up higher and higher until participants are interested and buy the bond. Obviously, investors want to make sure they're getting enough of a return for the risk they're shelling out. And when that risk to return ratio isn't good enough, the yield rate goes up. Now, the Treasury Department and the Fed desperately don't want the US 10-year yield going over 5%. So they're effectively backstopping these US bonds by buying back the bonds themselves. And not only did they buy back $10 billion of bonds last week, but they've done it again, buying back another $10 billion worth just this Friday. So again, the US Treasury has just matched the largest Treasury buyback ever in history 2 weeks running. And again, the market wanted the Treasury to buy back $18 billion, but the Treasury could only afford another 10. And now the Federal Reserve is sitting on a $1 trillion loss as a result of the pressure on these bonds. You can see it's not $1 million, it's not $1 billion, but it's $1 trillion in losses. It says here the New York Federal Reserve Bank, which handles the Fed's bonds transactions, just disclosed the losses. And they said the Fed's bonds are losing value as the bank maintains higher for longer interest rates in a push to fight inflation. Effectively, these bonds want to rise in yield rate, but the Fed is trying to backstop them to stop the rate rising. Likely because if the yield needs to go up to attract investors, then the federal funds rate also likely needs to go up as well. But of course, if the Fed raises rates further, it's just going to lead to hundreds of billions of dollars in losses for these major banks and a guaranteed stock market crash. It will basically cause the exact same crash we saw in 1982, where Paul Volcker thought that he'd fixed the issue of inflation, only for inflation to come back with a vengeance, meaning that interest rates had to go higher and that the stock market crashed even further. And as I said earlier, a Wall Street fund founder has now just filed an unexpected personal bankruptcy. It says in a stunning turn of events, George Weiss, the renowned hedge fund founder whose name has long been synonymous with Wall Street's success, has filed for personal bankruptcy in Florida, citing liabilities or net liabilities exceeding his entire asset base, tied to a staggering $100 million plus owed to Jefferies Financial Group. He also has a $180 million liability from the IRS that all of his assets added together simply can't afford to pay. It seems that not only are these hedge funds getting so heavily over-leveraged, but even the hedge fund founders themselves are taking on massive amounts of personal debt and still can't survive. As it says here, this debt stemmed from obligations incurred by Weiss's now defunct hedge fund, raising questions about personal guarantees and the risks of intertwining personal and corporate finances. basically saying he maxed out his hedge fund's leverage, so he started taking out loans in his personal name to try and survive. And now that his hedge fund has blown up, he himself is blowing up and going bankrupt personally as well. As I touched on, hopefully this is just the first of many personal bankruptcies, and hopefully many other hedge fund founders will soon be going bankrupt over the next few months. Now, I also found something super interesting here on the SEC website itself, and I can't believe I haven't seen this sooner, as it's been out for years and years. But if you search for this article about counterfeiting illegal naked shorted stocks on the SEC's website and head to page 43, you see a very interesting appendix. An appendix for the confessions of a paid stock basher. So this here is a news article or an article used in a specific SEC lawsuit. This SEC lawsuit about illegal naked shorting. It's on the SEC website itself, and there's some really interesting paragraphs in this specific article. So let's go through it. So this article basically explains how this paid basher is paid to bash stocks, exactly how he bashes them online, exactly what kind of factual and non-factual stories he makes up about them, but also, more interestingly, exactly how much he's paid to bash these stocks. So, it says here that he was a serpent basher because he was known for effective bashing based on facts and truth. So, a different kind of bashing to other bashing. Now, he was paid a base wage of $18 an hour for his service, which doesn't sound like too much, but he had some pretty interesting bonuses. So not only is he earning $18 an hour, and by the way, I think this article's from 2006 or 2008, so I'm sure it's more in today's rates. He was also given a $1.25 bonus for every decent quality post, over 100 per day, as well as a monthly bonus of $100 for every penny the stock had dropped from the previous month. Imagine if he gets a stock to fall an entire dollar. That's $10,000 of a bonus he'd be paid in one singular month. So imagine how much these paid bashers were paid when AMC fell from $70 per share to $2 to $3 per share. And the same with GameStop. Imagine them getting paid from $400 per share downwards. Imagine how many hundreds of dollars both AMC and GameStop were pushed down, and how many tens of thousands of dollars, hundreds of thousands, millions of dollars these paid stock bashers were paid. If it's $100 per penny, it's $10,000 per dollar, or $1 million for every $100 a stock drops. And again, that's just for one individual stock. They're not just bashing one stock, they're bashing AMC, GameStop, other meme stocks, Bed Bath & Beyond, all of these small companies that are out there as well. There's tons and tons of bashing going on. On top of that, he was also paid a bonus for bashing on weekends. And he said that he made a decent, though dishonourable paycheck, plus a nice laptop with free wireless internet connection. Again, free wireless connection doesn't sound like much these days, but back in 2006, 2008, 2010, it was a big deal. So guys, as you know, short sellers are currently trapped left, right and centre. They're trapped in their imploding basis trade, trapped shorting precious metals and commodities like gold and silver, and of course trapped shorting companies like AMC, GameStop and other smaller meme stocks. Gold is also in a massive bull market, hitting new all-time highs over $3,400 per ounce, and it's also setting up for another bull flag breakout. On top of this, a few months ago, President Trump signed another executive order. This one called Unleashing Alaska's Extraordinary Resource Potential, to develop Alaska's precious resources like gold, silver, copper, energy, minerals, and more. And as you can see from the chart, gold stocks have a tremendous gap to close when compared with gold's spot price, which has soared. And that's why, right now, I'm bullish on the gold stocks sector. With no debt and approximately $2.96 million in cash and cash equivalents at the 31st of March 2025, and a project in Alaska, the sponsor of today's video is US Gold Mining, trading on the NASDAQ with ticker symbol USGO. The stock was trading as of early June some 40% below its all-time highs. At its April 2023 IPO, gold was worth just $1,930 an ounce. Now, gold is trading at an all-time high. Yet, USGO share price is still around its IPO price, down around 40% from those highs. Their flagship Whistler gold, copper, silver project includes 3 gold deposits, with combined estimated mineral resources of 6.5 million ounces gold equivalent in the indicated category and an additional 4.2 million ounces gold equivalent in the inferred category. On top of this, just one shareholder owns 80% of the company, so this is a very unique scenario as pretty much all of the shares are locked up. The most critical development, and in my personal opinion, a potential value driver, comes from the Trump administration's attitude towards Alaska. This is Mike Dunleavy, the governor of Alaska, with President Trump, and with the CEO of Gold Mining Inc. on their Whistler project in Alaska. Tim Smith, the CEO, came to US gold mining from Newmont, a 100-year-old gold producer, one of the largest gold mining companies in the world. He also worked for Kamenak, which discovered the coffee deposit in the Yukon and advanced the resource until Goldcorp acquired it for $520 million Canadian, one of the most significant buyouts in the past decade. And while we're talking about different projects where outcomes could be different, this is the reason he was recruited to be the CEO of USGO, so that he can utilize his skill set to work towards similar goals for US gold mining. So with gold recently at $3,400 per ounce, the best performing major asset class of 2025 so far, and with Trump's massive executive order for the benefit of the state of Alaska, and with one major shareholder owning 80% of USGO stock, and a CEO that's fit for this role, do your homework on USGO trading on the NASDAQ. Again, super interesting article if you want to know more about the confessions of a paid stock basher. And again, you may say, well, Tom, this article is obviously rubbish, it's made up, it's baloney, but remember, this has been used as an actual appendix in an actual SEC investigation. So guys, be sure to let me know what you think down in the comments below. And as always, guys, be sure to ding that notification, because that way you'll be alerted when I upload a new video. Cheers.